We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right. Hey, welcome back, everyone, to the Capital Mindset Show. Well, it's been a while, I can say that. But, all right, let me, hold on. I had some echo there. All right. All right, so we're going to do a more structured live stream as per requested, and I think I actually enjoy it more when it's a bit more structured because it kind of gives meaning to, just getting stuff out there and just talking, okay? So there will be a Q&A session as per always because you guys typically guide the conversation anyways, and we're gonna put that towards the end. So what I'm going to do, if you actually look at the description right now, you can see the topics that we're going to be covering over today. And I'm going to actually be also kind of following along that, and you guys can reference that if you're kind of questioning, okay, what's going on? It's in that order. So the first thing we're going to be talking about, of course, is Tattooed Chef. So TTCF, the stock that has made the YouTube stock finance community up in arms, civil war, whatever you want to call it, or started it all, for better for worse. It is now below $5, and this is a significant point because, well, we have our criticisms of everything money here on the channel, but, well, actually, I don't know who made a video on it first, but I'll just say that they did, and yeah, the point of that was the hubris. If you actually see the video of Jeremy actually saying that it could never get there. And there was one criticism. I remember that video because Strongman actually made a video on it recently, and it brought up some memories. So you guys can go check out the old Tattooed Chef videos here on Capital Mindset. And one of them was criticizing Jeremy for one key statement. The statement about dilution, which didn't make any sense. And if you guys remember the video where Jeremy was talking about everything money and, for example, saying that there's no reason for them to dilute because I want, everyone to kind of take this and extrapolate from it, learn from it, and apply it to every company ever from here on to the end of time. An argument that a company has cash and doesn't need to dilute, therefore it won't dilute, is silly, to say the least. I'm going to be polite and say it's silly. The reason why is because at the end of the day, the company will, for one, even if it doesn't necessarily need the cash, it will acquire the lowest cost of capital possible, whether that be through debt or stock issuance. And so understanding that, we're already saying, okay, well, no, it does depend. But on top of that, the company Tattooed Chef, which I'll share with you guys right here, the actual screen, and let me actually remove the comment there so you guys can see that. All right, it's nice and centered. It is down 5.31% and it hit under $5 just after hours. According to Google, it is at $5 exactly, so it'd be interesting to see what happens to it tomorrow. But for the most part, it was a cash burning machine, let's say the opposite. Instead of a cash flowing machine, a cash burning machine. Of course, the fans of the company are going to say, well, it's early stage. They need the money to invest in various, their infrastructure. They were doing so to improve their margins. There was the whole gross margin issue. And remember that the company, I think for the most part, imports most of their food from Italy. And that's like a selling point that they have. I'm not sure. I don't remember entirely. But that's mainly one of the issues that the company's having to kind of reconcile. And they've been trying to manage their margins throughout this whole, you could say, cost push inflation, but it's been very difficult and something that the larger players don't really have that much of a difficulty doing in comparison to something like Tattooed Chef. And one of the things, because I think I was fair, the things I would be most excited if I was trying to not put my biases in front and trying to look at the company as, okay, what would excite me, if anything? And I think the only things that really excited me was snack foods, because if you guys know anything about frozen foods, you know that it's very, very, very competitive. And to rely on that is questionable, whether or not you're going to have a successful strategy. And it's a very cutthroat business. I know that many of you and I've talked to some of you in the Discord. Some of you reached out privately who work in the fields, particularly in retail for food. You guys know how cutthroat this business is. It's extremely cutthroat. And I think many of you who aren't in that field also notice that too. I remember some of you shared with me some really good points that I didn't address in the video specifically, but regarding, for example, I think it was potatoes, a potato brand from another company, and then all of a sudden another company comes in and makes basically the exact same thing and just makes it cheaper. And the store, right, because the store has essentially the power in that case, started, putting that potato brand all over the place, and basically the other one kind of faded out. So maybe these up and coming brands, they get acquired, but it's a very cutthroat business. It's not easy, but can it happen? Yes. I'm not going to say it's impossible. It's just, when we're looking at what to invest in, we have to kind of measure, okay, what is probable? What are we willing to put our hard-earned money, because it's your hard-earned money. What are you willing to put your hard-earned money behind? And hopefully it's something that, you're confident in and you can understand the risks. Okay, so that's pretty much the conversation regarding Tattooed Chef. I'd like to see the next quarter to see what happens. The only reason why this company's even on my radar is because it is, I guess, a very well talked about stock on the internet. I don't know why. I actually wish we would actually stop discussing it altogether, or I wish it never rose to such prominence. I think it's more of comedic relief at this point. Well, it's always been comedic relief. I don't think ever in my circles I've ever talked about this either in anger or anything else other than comedic. It's just funny. Okay, so then let's see the second topic. So the second topic is the market sell-off. So I've been gone for a bit over a week now, and I literally was not looking. You guys, if you guys have participated in the Sunday call, you guys know how I kind of felt. I was very surprised with everything that was going on, and I couldn't really see it happening live. I had to see it almost after the fact, little glimpses here and there, and it was crazy. It was nuts. And I got just like the little snippet updates from maybe some news push notifications on the cell phone. But for the most part, I wasn't really, I was disconnected. And the market actually just took a nosedive last week. And for me, it's kind of just fascinating to see how everyone's kind of reacting to it. I don't think it's still not even that bad. But I guess people were used to, I guess, a different scenario. They weren't expecting it to happen like that. But I don't know. I think the conversations that we've had, I can't even count how many live streams we've had talking about housing data, talking about Walmart, Target, and their earnings reports, what they were telling us. Well, if you go back into January's videos, you have the ones on banks, the ones on REITs. By the way, actually, I want to take a little pat on. Maybe I don't want to celebrate too early, but remember that REIT conversation we had? Well, take a look at them now. So I might get into that. I didn't put that actually in the list, but maybe I should actually add that in. If I end up talking about it, I want to keep it structured and put it in the description for anyone else who watches this after. They can kind of see, because I don't want to waste anyone's time. If they look at the description and they're like, I don't like any of these topics, they don't have to watch it. So trying to do good by you guys, my viewers. Okay, so the next topic, well, we're still on the market sell-off, but my thoughts on it simply are that I don't really care. we're talking about it, but like everyone likes to talk about it, but I don't really care. I could actually care less. Now that does segue into the next part, which is stocks I am buying. Okay, so stocks I am buying. This is probably something that I like to also talk about on live streams and videos, because it's also like kind of inward looking. It's a way of self-reflection. And as I talk with you guys, I also kind of think to myself, okay, maybe I didn't think about it that way. And it's kind of like talking out loud. Have you ever guys had that feeling when you have an idea and you talk out loud, and then you kind of either like the idea more or you don't like it as much? It's just a form of self-reflection. So if we're looking at, and by the way, if you guys are asking about these companies, we can do that in the Q&A, because I actually would, it's too many stocks to go over. And so there are probably stocks. I see Visa and MasterCard from Lilix he's saying those are down. So maybe I'll take a look at those live. But yeah, okay, so stocks that I'm buying, and surprise, surprise, I'm pretty boring, guys. I'll buy like the same stuff. I have like a strategy. If you go back to the chemical company videos, what did we talk about? I implore everyone to go check those videos out. I think I even did a live stream about it. But I know I did a video on it. And in that video, we talked about how there's more than likely pain ahead for these companies. And so remember that in my strategy, I like to buy in over time. And if you actually look at now, which I'll actually pull up the portfolio here because it is updated now for the new position. And some of the positions have changed in weighting to the upside. I've actually added, and I'll talk about the ones that I did add because that's the whole purpose of this. Did I say porpoise? I think I said porpoise. The whole purpose of this section of the live stream. So I did add to some of the chemical companies. I added to ticker symbol CE. I added to that one. I'll show you guys this one. So this one's having some severe pain, and I think it is down about 20-something% from the video. And you actually take a look. Again, I'm going to highlight this one more time for everyone. When you see a P ratio of 4.91, I want you to start asking questions. You should start asking questions because more often than not, that's a little too good to be true. So there's probably some problem there. It's either maybe it's a cyclical. And in that case, maybe the market's actually telling you that, well, going forward, there's going to be some turmoil, some turbulence, because typically cyclical companies they're expensive when they're cheap and they're cheap when they're expensive in terms of visualization. And retail sometimes gets that wrong, unfortunately. We can talk about the semis, for example. That's a good one with Micron. And also Lennar, the home builders. We've talked about the home builders in the past, but same goes with those guys. They're kind of hand in hand in that lesson. But it's important that you kind of understand that. So at least it should bring up questions in your mind. And then you go, okay, explore that further. Why a 4.91? Well, I think it was like at 5 when we were talking about that. But those should spark those questions within you. And then you kind of go, okay, let me see what's really going on in there. Hopefully you explore enough, because if not, and you're like, oh, there's nothing wrong. And then you kind of, that's the danger, right? And then that's the importance of understanding what you own. Okay, so, but anyways, I did add to CE a little bit. It's still a small position because we're still building this out. But if you kind of add the totality of, I think, the chemical manufacturers, I think Buffett's buying CE too, by the way. I don't care if Buffett buys or not buys. It is what it is. So, I don't plan a strategy out just because Warren Buffett is buying a stock. That shouldn't matter. But because you have to understand, he's on like a different playing field, guys. And so when we're looking at CE, I'm kind of still excited. I bought some CE. Let me I'll just show you the portfolio. I see already, like, at least, I don't know how many people are in here already. You guys have like the links. Well, actually, no, because as soon as you click the link to do it, it actually saves, I think, in your Sheets list. So I think that's a benefit. That's awesome for Google Sheets. Anyways, I'll zoom in. And Netflix has remained untouched. And let me see. Meta. I added to Meta. So you actually see Meta. Meta was down to about 6-ish% before I enabled the update. And you can see it's back up to about 7.39 because I added. And I brought down the cost basis a little bit. Or did it? Yeah, it did update. Okay. I was like 150. Yeah, it is right. And then let's see here. Thor Industries. Do you guys remember when I added too much to Thor Industries and then I pulled back the position? Because I was like, because if you go back to that video, which I think that's linked here, that's what this is for, if you guys are curious. And I'll be honest, for these videos, it's honestly because I'm such a bad labeler, so I don't remember which live stream I talked about these in. But I did a decent job at doing the other one. So Thor Industries, you can actually check out this video here, but I'll summarize it for you. That's another live stream. The summary of why I sold is basically I thought that I built the position a bit too large. And in that live stream, it was or not that one specifically, a couple live streams before, like I said, this is kind of like me thinking out loud. I said to myself, okay, well, Thor Industries might do bad in a recession. Well, what do I think we have ahead of ourselves? a recession. So because remember that was a thesis for me selling out of my oil stocks and BHP and Rio Tinto. Well, Rio Tinto didn't do well, by the way. Only BHP did, and ConocoPhillips did. But I was like, okay, if that's my thoughts, why did I allocate so much? And then during the live stream, during talking to you guys out loud, just basically me thinking out loud, I said, okay, maybe I think I made a mistake there. I allocated a little bit too much. And, to the detriment, I think it was, let's say, I don't remember what it was, but you can go back to the videos. I believe the allocation was couple percentage points. It was larger than what it is now. And in that live stream, I talk about why I sold Thor. But again, if anyone helps me out with this, if you guys find out which videos these were, just send me the link so I can just add them to that. Because yeah, it kind of irks me that there's just a gap there. But I need to do better with my labeling. So, typically in these portfolio update videos, if there's anything major like a sell, I'll be more prudent about doing those, as I've been. But if there's a buy, like the one I'll talk about just very briefly, because I don't want to put too much attention to it. Other than the ones I'm showing you here, if it's on the other side, I don't like to put too much attention to it. But the buys, I kind of tend to be a little bit more spaced out, you could say, and especially with work being busy. So, okay, so Dropbox hasn't been touched. AeroJ Rocketdyne has been touched, aside from the call options that we've been doing here and there. And the one that, let me see, where's Unum at? Because I'm actually curious. I didn't even see Unum's price today. Unum. Okay, Unum's at like $38. The reason why I'm bringing them up is because I'm technically underwater on a position of call options. Well, I would still sell it for 100% gain if I'm called on those shares, but right now it's like an opportunity cost game. So if by December we're not at the $35 mark for Unum, I'll keep the entirety of the position. But I'm just happy that I didn't do the whole position, because that would have been like, oh gosh, at that point the money would actually be decent. All right, anyways. Let's see here. I didn't do anything to Thor. Dow Inc. didn't do anything to them. BASF didn't do anything to them. CE, I did build up the position a little bit, and it's still down, but you can see the cost basis is down too. I almost said the amount of shares I bought, but that's private. Cardinal Health. Cardinal Health is actually kind of teetering on the chopping block. I'm not gonna lie. Cardinal Health, I'm contemplating taking some profits in that stock. Right now, I'm just collecting the dividends, not reinvesting any dividends, and just kind of compiling those. Molson Coors, no plans on that one. That one's been a terrible performer, I got to say, because of the duration that I've held it for at this point. Well, no. Actually, I take that back. Relative to the markets, actually, I outperformed the market because the market's down. So never mind. It's actually performed well. Warner Bros. Discovery. I haven't added to this one. This one's still so many question marks. So I'm happy with the streaming allocation I do have, which is heavily skewed towards Netflix. And then the Warner Bros. Discovery is still kind of there. But, I'm still kind of looking at it. The question mark is everything around the debt, really. And there's nothing really wrong with the content. I think they have fantastic content. I find myself going on HBO Max way more than, well, not the Netflix, but definitely more than Disney. I never find myself going on Disney. I think we just have Disney because my wife maybe once in a while likes to go on there, but I don't really like much anything on there. All right, Markel Corporation. A lot of people like Markel Corporation. And let me see with, let's see, Citigroup, by the way, as I always say, I always have to say this because people think it's because I like Citigroup. Citigroup of the banks is my least favorite bank, but I just have them. They were the smallest allocation from the past. I went through a little period, if you guys remember, again, really easy to do this. You can go check here, and then you see BAC, JP Morgan. Those were the banks that I bought for a brief moment in time. Oh, there was also Adobe, by the way. You can actually check out my thoughts on Adobe too. But BAC, JP Morgan, Chase, those, I bought them, and it turned out to be a trade, but I don't like to typically do trades. Okay, but it turned out to be a trade. We did okay on those. So again, kind of something basically, I was kind of a little bit spooked what was going on in the bond market, and that's kind of why I trimmed the position, but it's not ideal. It's not ideal. Okay, and then Magna International, I just didn't want the exposure. So all those have been sold, but those are already recorded here, so I'm not going to go over why I sold those. If you're curious, go check out those videos. Okay, so I was about to mention ConocoPhillips, but that's a sold one. All right. And MPW, yeah, I mentioned all those. All right. So onto this side of the portfolio. The only new one that you might see, and I'll highlight, is Perion Network. So Perion Network, I think that's a glitch. Oh, okay. It's registering correctly. I don't know why that's the case. Okay. There we go. I was like, that's weird. Why is it like 1,800? But Perion Network is the new one that's been added to the portfolio, and it's still quite small. But yeah. Oh, one more thing. Barbecue Holdings. So this one, it was taken away from me. I lost it. I wasn't able to keep it. And I don't know if I addressed this to you guys yet. There's no video about it, and there's no video coming for Barbecue Holdings. Well, you know what? Now I can, because it's no longer a publicly traded company. So, yeah. So I can probably do a video on that one, because I have like a policy even though I'm probably not going to move it, but I have a policy not to talk about companies of certain size. And we closed off the total duration of the holding at a 40% gain. So pretty nice, but it got bought out by a Canadian company. So for those of you who are Canadian out there, yeah, it was an opportunity, right? I don't know if I butchered that, but all right. But anyways, so that was taken away from us. And I think the others, the really small, like for example, if we go to like some of the Greenwich Life Sciences, like that one's like destroyed. Don't invest in that one. That one's literally just kind of a throwaway money at cancer research. Just keep that in mind. That's why it's labeled as fun. BurgerFi, same thing. That's fun. I like their custard shakes. That's literally the thesis. And then Prosus and Baba. If you guys don't know my opinions on Chinese VIEs, my gosh, you have a ton of content on the channel for that. And, maybe I break my rule. I don't know. I'll leave it up to you guys to decide whether or not I break my promise on not talking about Chinese VIEs until they go back up. Because it would be so easy to make videos right now while they're down. It would be so easy. It's really difficult to make videos when they're very popular, when everyone wants to invest in them. That's when it's difficult to make videos about them, and that's when we were making content on them. Now, when they're this low, I mean, making videos on them, it's easy to garner attention and say, oh yeah, poo-poo on these Chinese VIEs. But anyways, yeah. Let's see, but yeah, Zillow, OSTK. OSTK is the one that, we have to always say there's going to be ones that we get wrong. OSTK, that's why it's a speculative position, and maybe I'm wrong on that one, but I still I'm just going to hold it, and it's a tiny portion of the portfolio anyways. And Zillow is living up to its non-potential. Because there is a company that actually is what I call the better version of Zillow. And I was on a call with one of you, I don't know. I think it's like, well, not specifically only you, but it was a general Discord call, and we were all on voice chat, and one of you uses the other company's products quite frequently, and you were able to share your experiences with the other one's products. And I heard the words that, it's a company that I truly find value in what they do as a software service provider in terms of real estate. So if you have a real estate portfolio, it makes it really easy to manage. Now, Zillow, I wish they would move more in that direction, but it is what it is. But that's why they're just a little ball of potential, and that's about it. Coupang, I don't know, man. That was just like a Chad timing move. But it was a company that I wanted to take a speculative position in, and it's performed really well. And relative to its size in the speculative portfolio, it's performed really well. Now, the one I'll say is like personally, because this is kind of what you might be asking, okay, what are you going to do with Perion there? Well, Perion, that's a play on ad tech, and I can get into it a little bit, but it's a play on ad tech, and I'm thinking it ended up getting it here, not into the core holding, because just the sheer amount of research and understanding that I would have to do in order for me to then mentally classify it as a core holding, it can reach over there, because I think for what's there, for me, is interesting. For me, it's interesting what I see there. But for now, it's going to remain here until I become more educated on the the technology and the potential. Now, the one at the top, that's one that I think I made one video when the channel was really small, or maybe 2 videos, and I don't talk about it much except on live streams. But that one's done fantastic, and it's basically a counter-cyclical play on, just kind of in a funny way, betting against the U.S. housing market. in a funny way, okay? I think it's funny just because like the Big Short and stuff, and it's totally not as amazing as the Big Short. I'm not gonna make that much if it goes my way, but I think it's funny. All right, when is BurgerFi? Fuhat, BurgerFi is a bit on the small side for me to be comfortable talking about it, and also, if I'm being honest, Fuhat, it has a lot of problems. It is a fun stock for me. I know you like it, Fuhat, but I'll tell you, probably my video would not be too positive, except for it's just kind of a pipe dream at this point. It's a bundle of potential, but can they live up to it? Because the restaurant business is very difficult, as you know. I know you know. But yeah. When am I gulping on Rick? Oh yeah, Rick's in here. I forgot. Yeah, Rick was the one that got away, guys. I never released a video, but maybe I'll release it. I unironically took a look at Rick, and as you guys know from the Discord, from the various calls and such, I actually took a liking to the company. I thought the company was actually pretty good, because I know it was a joke the whole time. And I think it's also because when in discussion with you guys on these lives, it always came about with an aura of, we were joking like, oh, Rick, they look what they own. And then I was like, oh my gosh, like when I actually took a look at it, I was like, huh. So you can't say I'm closed-minded, guys, because I that was my preconceived notion. I came into it saying like, oh, this is a joke company. And I was like, what? This is actually pretty good. Like what management has done thus far is pretty good. Oh, and I'm going to do a poll for you guys, because if you guys don't know, I have a terribly old chair. I have this chair that I've had for a long time, and I'm looking to buy either a steel case or Herman Miller, and I'm literally just staring at it, not knowing which one to get. So yeah, I wanted to poll you guys in case some of you, I know some of you probably have experience with both those brands more recently, and which one would you guys get? So I'd love to hear your thoughts. Oh, Hag Capisco. Okay, well, I got to write some of these brands down, because I know there's like infinite brands. So Hag Capisco. Especially if, you're working like 8, 10, 12 hours in one chair, it's good. I mean, this desk does stand up, but like I like to have comfort. Okay, I'll pay for that comfort. Reggie Nintendo sits on a Herman Miller. Yeah, Herman Miller. That one's a good one. I know I've sat on both the steel case and the Herman Miller, but I'm kind of on the fence. I'm just kind of okay. So let's see the next topic, because I want to go over it by topic. Oh, well, that was the last topic. So stocks I'm buying. So I covered all the topics. All right, so now we're going into the Q&A, and the Q&A is basically now going to be driven by you guys. So I'm going to be looking at, I'm going to move this chat over here, because I think I want to have them both, because sometimes the widget does not work. So it is what it is. Okay, so Intel, Taiwan Semiconductor. All right, we're going on the Q&A, guys. So now we're seeing Intel, Taiwan Semiconductor. So I have a video on Intel. You can go check that out. I think it's almost an hour long. I actually think it's a good video, but of course I think it's a good video, but go check it out. I like to make videos, or I try to make videos that don't get outdated so quickly. So the information in that video, even though the prices are all different, is still, I think, valid today. So even though it's months old. So go check that video out. But one of my thoughts on today, it hasn't changed much on Intel. Intel has been a story that management has misallocated capital for such a long time. And right now, they're just facing the consequences of that. And they should have been doing some of the stuff that they're doing now years ago. So can they catch up? Yes, they probably can. And the management team is trying their best to become the alternative to Taiwan Semiconductor. That's really the play here, because as far as the silicone, as far as the architecture goes, they're in a bit of a problem. They're in a bit of a pickle. You have very strong competitors, on top of the fact that the industry itself is changing from one architecture to another over the next coming decade in the cloud, and that makes it a little bit difficult if you're not at the edge. And well, let's actually pull up Intel, because I'm actually curious what they're even at. I haven't even seen Intel's price in a while. So hold on. Let me go to the desktop before I type it in. Okay, so INTC. I haven't seen it in a while. Oh my gosh. Well, yeah, I think I saw it near this. Okay, so it's like 26.97. You're getting look at this, guys. You're getting a 5.41% dividend yield. We're gonna turn into ASMR, just like start clicking on the thing and then telling you guys dividend yields as you go to sleep. I feel like that would be a successful finance YouTube channel. Just talking about dividend yields and then just like saying it in an ASMR video like that. Anyways, so P ratio of 5.78 again. So if you're newer to the markets, brand new. So if you're watching this video and you are brand new, congratulations, welcome. Look at that P ratio of 5.78. I want you to start to say why. Why is that? Don't automatically say PE low, therefore buy. There are YouTubers that do that, and you guys are probably going to say who some of these are. But yeah, let's see here. Someone's saying, okay, what's a good chair and desk to get? I want to build a good setup. So I have a really big desk. I have a couple desks. So I have a desk here on the side. I have this front-facing desk, and I have a desk just in case over there with another computer there. So that one, well, it's my old computer, and then I have the new computer set up here. So, and then if you guys don't know, so I have 1, 2, 3, 4, 5 screens here, and then another one over there. What's my watch? So this is my daily driver right now. I've fallen in love with this watch, so I've been wearing it for pretty much the entirety of this year. And right now this is my daily driver. I love the color blue. We'll get back to stocks, but and it is also Q&A. And so this one is the Tudor Pelagos FXD. And for those of you who, well, I expect some of you to ask a follow-up question after that, but we'll see. If not, I'll just leave it at that. Okay, so PE low equals buy. I have a shirt that says that. Yeah, I mean, for some cases, you might get lucky and that works, but oftentimes the market might slap you in the face because it's cheap for a reason, and so you want to investigate that. So yeah, but yes, Intel. I have a cautionary stance on Intel. I haven't changed my thoughts in the past year on Intel. Going back from when they thank goodness, you can see why, even though I did not at the time kind of understand the technicalities as to what was the problem with Intel, when I disagreed with management's capital allocation, just on that, I was gone. And I remember that video, and not that it's not hate. Capital Mindset, the channel doesn't really get hate, but disagreements, and sometimes flared disagreements, sometimes not so flared. I think the Intel one was not flared at all. I think people were just very cordially disagreeing with the commentary at the time. But again, me making an Intel video now about poo-pooing on it would be, poo-pooing on a stock while it's down, aside from this live stream, I guess. But yes, I think that the management is focused on trying to become Taiwan Semiconductor alternative. That's what they want. That's what they're going for. End of story. Okay, I anticipate lost a lot of money on R&D graphics card. Yeah, they burned a lot of money on that. I don't know if they canned that project. I forgot if they did, but I want to say they did can that project. And if they did, yeah, it was another cash burn. But they gotta throw money around and see what sticks, because at this point, this is I'm pretty sure they have a lower market cap than AMD now. Like, AMD has now become the king between the two. No. It actually came down as well, 107 billion and 110 billion. Okay, so they were for a moment, I swear to you, they were for a moment at a higher market cap. And Advanced Micro Devices is also going through the similar struggle because, as we all know, or semis are cyclical. And we talked about that when we looked at Micron, we looked at even NVIDIA back in the day. You want to be careful with these because if you're entering them at the end of a cycle, which all of this kind of ties together. So this is where actually I need to add this to the video. Definitely. I'm going to add this. I'll add it later. But I wanted to talk about REITs for a second and how it coincides with the liquidity crunch, how it coincides with everything we talked about, energy, everything we talked about, commodities, and how when you get to a point where things bubble over, the consumer begins to reject prices, and that filters through everything. That filters through into the business world. The past couple months, what have we been seeing regarding tech companies? Well, we've been seeing a freeze. We've been seeing a slowdown. We have Meta, for example, Alphabet, Microsoft, other companies in that space as well that will remain unnamed. And those companies are all taking action, and some of them a little bit later than others, but they're all telling us something. And you know, you had plenty of times, plenty of data to actually go back and see it. Go back to the Wells Fargo videos or the videos where we talked about housing in Wells Fargo. I got to do a better job with the labeling, but I'm pretty sure there was a live stream or two, or no, definitely not two, several at that point. But with Wells Fargo, so I probably sound like a broken record to some of you. Some of you are newer. But with Wells Fargo, what did we say about Wells Fargo after their report? I think it was their second or first report of the year. Well, they were showing slowdown in mortgage lending. And then, well, let's kind of connect the dots. Why was that important? Why did we care about that? Well, I always say to everyone, every bank is like has a different flavor to it. And why it's pretty noob tier. Not to get into it, because also I got to be, I don't want to. There's some people that probably lurk that would definitely not want to teach, but it's very noob tier to just value a bank on only book value and keep it at that, because, and I'll get into it. Screw it, I'll get into it because it does depend on what they're holding. I mean, that seems intuitive, seems simple, seems, like, oh, yeah, of course. It depends on what they have. So different banks hold different things on their balance sheet. And, of course, that then causes different levels of quality, right? So if I'm looking at Bank A and Bank B, and Bank A has subprime loans, and Bank B, I'm giving an extreme. So Bank A, subprime, Bank B, let's say, has investment grade all the way through. Everyone has great credit scores and everything, all right? Well, obviously, Bank B is going to be higher quality, and you're probably going to be paying higher than book value for it rather than Bank A. So it's a little bit of nuance that adds to it. I love the comment, Will P. What flavor is Bank of America? Bank of America is strawberry red. Bank of America is my favorite bank. And they've actually been making a lot of inroads, I've been told, in the wealth management section. So a lot of wealthy individuals are actually going. Unlike SoFi, which, as a joke, this is kind of a capital mindset joke at this point, if you guys are new, that SoFi, because a lot of people said this, by the way, this is only, that's why it's a joke, is because they said SoFi was geared towards the wealthy clientele. And then you go on SoFi's website and it's like, early day paychecks and stuff like that. And I'm like, I don't know anyone who makes a lot of money that's really a thing for them. But it's, I think, geared towards students and geared towards younger people who maybe have a lot of student loans and, maybe don't make that much money right now. But I think it's a stepping stone. But there's also the part that, the larger banks are basically on a cheat code or whatever. So, yeah. Will P., I'm sorry, but their customer service is awful. I'll tell you that that depends. Yeah. And one thing I'll kind of add to that, because that's actually was a topic of the call on Sunday, but just to be brief about that topic, the reason why the customer service is awful is because you and anyone, we're not the priority whatsoever. And they actually could kind of care less if you bank with them or not. It's not really like if all of us would withdraw tomorrow and go bank somewhere else, it's not really, it'll affect them like somewhat, but it's not going to affect them that much as people might think. So management team is not really focused on providing retail, even though I think personally that they have a very good suite of products that are really good for the consumer. And as you grow your wealth with them, just to be clear and transparent, it's like you go through the preferred rewards program, which I think starts at 20,000 in total assets with the bank. And that can include anything in the FDIC insured accounts or in the non-FDIC insured Merrill accounts. And that kind of all qualifies you for, and I think you have to have a 3-month average of 20K, and then it goes to 50K, and then 100K for that. And then there's stuff beyond that, but that's getting more into the lending programs that they got going on. That's really good, I'll be honest. But, that's it. I've heard of Redneck Bank, actually, Andre. I actually have heard of that bank. And, I used to be kind of into finding the best one, but yeah, it's not about the platinum honors. It's that I have to call, no email, no web chat. Yeah, like I said, there's certain givebacks. So that's why I prefer having multiple banks. I like the smaller banks that are local for certain needs, and then my larger banks for other needs. It really does depend. So I have different relationships with different banks. And I actually encouraged everyone, by the way, that's actually one thing I know you can give financial advice, paid financial advice, and not need a license for it. It's any account that's FDIC insured or treasuries. Those are the two things, which is silly because, why would you be paying someone for that? But yeah, I think that having a relationship with multiple banks is good. And even when you expand beyond that, maybe even in different countries. So, but yeah, it's not about the rewards programs that you were forced to call. Yeah, already addressed that. Yeah, I've heard about Redneck Bank, and I'll go next year and let them choke. Oh, you guys are talking about something else. No, it's well, I actually don't know if Redneck Bank is a farming bank. Let's look it up. Oh, let's actually go here. Let's go to Redneck Bank. Let's go here. This is hilarious. I mean, have you guys seen this? I'm not sponsored by it, but Buffett buying Ally. This is an example of me not agreeing with Buffett, because I don't really go off of okay, what did Buffett buy? What did he not buy? I don't agree with Buffett buying Ally. I don't like Ally as much, but wait, did he buy it recently? Oh yeah, I wish that too. Oh my gosh, yeah. I'm with you there, Will P. I am with you there. Oh my gosh, I actually thought you guys are gonna laugh. I thought that fly was actually on my screen, and I was literally about to be like, what the heck? How is this fly just there? I will talk about BlackRock, Fuhad, because I know you love BlackRock. I don't know if you actually love BlackRock or you hate BlackRock so much that you want to talk about it. Okay, so all about us. What are you? All right, our family has been banking since 1927. Way before this year, Interweb took over the Bayou. What do you offer? High interest savings accounts. I want to see your products. This is just, I mean, I think it's part of obviously it's part of their strategy. Got questions, calculate your finances, online banking e-guide. Can I do anything else? Lost or stolen debit card. Do you have a mobile banking app, wallet pay? I can't really see anything from here what they got, but I love the marketing. It's a different strategy. It's kind of like a funny bank, so it's lighthearted. Do they have anything else? I know this is their big thing right here, but I don't know if they have anything else. Maybe someone can answer that. Okay, so Samviers, I don't want to teach the lurkers. You meant to slam the table. Oh, I get the reference, but no. There's occasionally, I don't know if there is or is not a large channel in here. All right, Capital Mindset, BlackRock. Okay, so we'll talk about BlackRock. Robinhood is giving 3%. Oh, guys, Robinhood. We're now sponsored by Robinhood, and Gil's moving around. Gil's just floating around because it's becoming an advertisement. Look, Gil's trying to tell you, go download Robinhood and get 3% APY. All jokes aside. Okay, 1.5% for non. Oh, okay. No. Okay, so now the counter advertisement. 1.5% for non Robinhood Gold. So you got to pay to get that. All right, so Could we look at SGH? Yeah, we can look at SGH. All right, but let's look at BlackRock. Okay, so the reason why, where's your thing? Where's your, okay, here it is. The reason why Fuhat loves BlackRock, and there's Blackstone and BlackRock, so BLK. So BLK, they are losing a state. I actually forgot what state. I forgot what state they're losing, I think the pension fund. But anyways, asset manager, asset management bros for all of you out there. And let's go look and investigate further. But I don't know if it needs that much of an introduction because I think all of you guys know what they do. You probably know their different funds, their different various funds that you can invest in. And let's just go. I just want to show you guys a little bit. But they have the iShares. So every time you see an iShare fund, that's BlackRock. And this is the company that maybe I should get into this. Maybe I should really get into this, how they're a custodian. They're not the owner of every freaking company that sometimes on TikTok you scroll through. And I think, how did I find out about that woman? I think it was like Cole. Cole, if you're listening, you are giving me, I don't know, stuff in my brain. I'll just say that. But there's, I think you guys all know the video. If you guys don't know, just go check out like crazy TikToker dancing, yelling about BlackRock and Vanguard, and you'll see plenty of videos. But they're talking, you know, always about how Vanguard and BlackRock own all the companies, every company ever. And so, you know, it's lacking all nuance, but whatever. Okay, but yeah, BlackRock has performed. Let's look at the performance to kind of show you guys. Okay, so the past 5 years, 30%, they've actually underperformed the market. Well, let me check because now the market's, you know, down more, but let's check that. Okay, so yeah, they have underperformed the market. But this is excluding dividends. So I think if you include dividends, it might eke out above it, but, you know, who knows? All right, so if I had to guess, I would say, oh, by the way, let me get rid of VU because you can't compare VU. But looking at the max chart, you're up about 4,000% excluding dividends. So this has been a fantastic decade for companies like BlackRock, Blackstone to profit and benefit from the change in both, you know, the way consumers view finances and the way institutions view finances. So definitely the next 10 years, maybe it gets even better. Who knows? Maybe more people get involved in these different funds. Maybe the desperation by pensions and other funds becomes even greater, and or maybe it becomes more competitive. I don't know, but those are some questions. But definitely in the past decade, it's been very transformative for the industry, and BlackRock has been there to truly benefit from that. Blackstone, taking a different approach, is probably, if I'm being honest, a little bit more favored by me, but not that BlackRock's a bad company. You're looking at two solid companies and two just different strategies, two different ways about going with it. And if you guys have been in the markets for a longer period of time, I think if you've been in the market at least 5 years, you might remember the days of Blackstone being a partnership and not a C Corp. And they actually did the change, and that's actually was fantastic because if you guys don't know, you guys can't be included in a lot of indexes if you're not a C Corp or if you're a partnership. And that's actually something I talked about with the pipeline stocks. I don't know if I got a chance to talk about it here live on YouTube, but it was definitely a topic of conversation in one of the calls. So yes, BlackRock and Blackstone, if I'm talking about Blackstone, because Fuhat, you know, I know you like Blackstone too. One thing that Blackstone's really interesting, or what's interesting about it, is they're more focused on acquiring businesses. I think, really, if I'm honest, like I'd probably compare Blackstone more to Brookfield Asset Management than to BlackRock. But yeah, that's just me. They are also different strategies between those two companies. And I also like Brookfield Asset Management. You guys might remember from the old days, we had that one, and now I could buy Brookfield Asset Management back for a lower price. But, you know, that's not yet. I'll wait on that, and then I'll love to buy some more. But Brookfield Asset Management has also had a great time over the past 20 years because you've seen yields kind of taper down, and this has expanded the opportunity to offer more yield through alternative investing, et cetera, et cetera, et cetera. And BAM is a really interesting company to kind of get to know because of the structure. I think the structure is one of the most interesting parts. When you actually start to take a look at all the different companies that BAM owns, you know, you could invest individually in those, or you can invest in what some people call the mothership. Those of you who are probably huge fans of BAM, There's some Canadians out there that don't like BAM too much, but I'm talking about one in particular, and he's gonna watch this live stream later, and maybe he comments, but I'm calling you out. But with BAM, the fans of BAM, they call it the mothership, and then the various other entities are, other ways of focusing on a specific strategy. So you can buy BAM and get the full package, or you can buy a specific strategy within BAM, but you get what you get, and you have to contend with the fact that, well, there are management fees because BAM is managing the company. So yeah, that's that. Oaktree, well, Oaktree is owned by BAM. I think they own 65-ish%. But remember that Oaktree, you're trying to bring up all the stuff we talked about. But Oaktree is, and this is Fuhat's comment here, question. I don't want to skip over anyone, so I really do apologize if I did. But it helps me out if you @ me. Oh, yeah, but they don't own fully Legoland. I don't think so. I think that it's a joint venture, because that's what a lot of these companies do, which kind of segueing both into Oaktree with BAM. BAM also is going to joint ventures with Intel. This is another thing about Intel, if you guys didn't know that. So Intel is not investing directly in, or they are, but they're not investing fully, or they're not footing the full bill for the different fabrication facilities and the research development facilities in Europe. They're going with it with a partner in each of them, and they're kind of expanding this model. This allows them to not put as much risk on the table, but they're kind of giving up future potential or future earnings. But the point is that they're able to do this much quicker because they're able to kind of stretch out the cash that they do have more. So it's like saying you want to buy one full house or 10 houses with 10% down. Let's say all the houses cost the same, 10% down each, and you mortgage the other, 90%. Well, now you have 10 houses versus having one house fully paid off, right? So it's kind of like that process, but kind of expanding it to this more complicated. But BAM, I think BAM owns 49% of the fabrication facility that Intel is building in the United States. And but they also own Oaktree, which I think it's like 65%. Oaktree focuses on buying distressed debt and in an effort to basically just pocket the difference if the company doesn't go to hell, so to speak. So if the company doesn't die, Oaktree should do fine. If the company dies, Oaktree, well, it is what it is, Yeah, Will P, I absolutely agree with you. This is the problem. So this was actually talked about in the Intel videos, why I disagreed with management's capital allocation. Let's go back to Intel, because I feel like I didn't put it to rest entirely. But Intel, with that 5.41% dividend yield, they're doing everything in their power, and I absolutely agree with Will P's comment here, to not cut that dividend. And I think I've received a comment here and there about saying I'm in Intel for the dividend. And I think a lot of investors feel the same way. And they bought Intel because they thought it was a blue chip company. Well, it is a blue chip, but and it's literally the color blue. But they thought they were getting into a blue chip company with stable cash flows, and that the technology wars wasn't that bad, and they were getting a nice yield that was growing over time. Now, the problem with Intel is in this sector, it's very, very, very competitive. And they were resting on their laurels of a decade. Because if we go back a decade, you might remember AMD. Some of you might have been in the markets during that time. But AMD was the laughing stock. And even going through 2013 through 2015, 16, I think around there, they definitely were not being as much of a laughing stock. Every time you saw a performance video on YouTube referring to the CPU of Intel versus CPU of AMD, it was always just kind of dogging on AMD. AMD's performance was worse, but it was cheaper, and that's what they had on them. Now it's kind of reversed. So Intel was resting on their laurels over the past decade, and AMD, with Lisa Su under her direction, changed themselves drastically, and they didn't allow their down position to take them out. They just grew and became better. Okay, so let's see. Bring up Oaktree rules. Also interactive. Okay, we'll get back to this, but let me go over it because I saw some other ones. I'm really interested in Olaplex. So now it's sold off a ton and looks appealing. All right, so this might be the thing we were waiting for when we talked about it. Maybe I should do a write-up on this. But oh wow, so it's like $10. I think when we brought it up, out of curiosity, I think it was like it was like around here. So now it's down another 26.55%. The thing with Olaplex, it was trading at a premium to the market. I think it was like 30 something. I remember it. Now it's at 27. But for those of you who don't know Olaplex is a company that has this nifty, I'm going to use that old word, hair products. And if you talk to a woman, and ask her about Olaplex, or a salon, go to a salon and ask them about Olaplex, you'll get a feel for how important Olaplex is right now as it currently stands in the market. And it's very in right now, okay? Because the quality of what it does to your hair, supposedly, I don't use the product. My wife does. But every time I ask her, she's like, oh, Olaplex, thumbs up. There's another one that's coming out, but it's kind of like, it's like the cheaper version, but, it's the cheaper version. And I also want to refrain from saying the words anymore, the McDonald's of something. We're now going to use the words the Burger King of something, okay? Because I think it's unfair to McDonald's, because McDonald's is a great company, but yeah. I'd say, Burger King's definitely the Burger King of the industry. So do you think Olaplex will have brand power of Apple, Tesla? No, it's not that kind. It's not that kind. I don't like that sale on the website though. Well, the thing is, especially now, I'd say that companies like Olaplex might have a bit of a struggle because they're not cheap. And if people are looking to cut back on something, maybe, I don't know, just a hunch, maybe they might cut back on, a fancy schmancy or hair cleaner. Maybe. I don't know. Just a hunch. Maybe they do that. Maybe it's so much of a priority that they can't cut down on that. But it is a more expensive option for what is out there. I know that for sure. And based on what I'm seeing, there was something my wife sent me. Hold on. There was something she sent me the other day. It was absolutely insane. I'm just in awe by the internet. So there are TikTokers. I don't know if you guys know this. Maybe you guys know this, and I've just been living under a rock. But there are apparently TikTokers who go to Target, okay? All they film is them shopping at Target. And it gets lots of views. Very popular content, apparently. I had no idea. I don't see the appeal, but, who cares about what I think? So won't be squeezed, and there are people who will cut spending. That use Olaplex won't be squeezed, / are the people that will have to cut spending. Yeah, that is a counterpoint. Yep, that is a counterpoint. So we'd have to really kind of pay attention to the demographic, because maybe their market isn't so dependent on lower income folks. So Kingdom, we were referring to earlier, so about opportunities. But anyways, the decay of modern society, watching people shop on Target, TikTok, get a job, LOL. No, I'm saying it's incredible. But so how I'll defend all the people who watch this stuff out there, because how it's explained, and this is again highlighting why gents, if you didn't know this, you don't matter that much as far let me explain, as far as a consumer goes. In reality, marketing, as far as consumption goes, is more geared towards certain personalities. And the personalities that watch something like that, it's definitely for them, because this is the description, okay? This is actually not my wife who said this, but it's therapeutic. It's therapeutic. So it's like inspirational. Very similar to Pinterest. Why do you think Pinterest exists? What is Pinterest? Pinterest is, utilizing a social media feature to put things and pin things that you like. And then you ask someone, it's like, well, why do you use Pinterest? It's like, I draw inspiration from it. If someone will pin, I don't know, a cosmetic design of an office, and they'll be like, oh, this looks really cool. And then, Pinterest goes like, all right, well, it looks cool. And then go out and try to mimic that, get inspiration from that, right? So that's what these kind of emulate, I guess. They emulate inspiration of consumption, quite literally. Yeah, if we're breaking it down, yes. I'm not trying to say it's what we should do. or anything. It sounds like I'm being very defending it, but it is what it is, and that's why that demographic is so valuable, and why companies try to get them right. Look, it's a different thought process. It really is, and they're inherently the bedrock of consumption, and by extension, for the companies that we invest in, they're the customer, right? They're what we have to go for. Anyways, Fishman. Oh, innovative properties. That is the one. Fuhide. I don't think that's red pill. I'm a married guy. I don't think I can be red pilled. It's called the pink. I wouldn't call that the pink tax. Pink tax is like that certain things are more expensive just because. I think that's what the pink tax is. But anyways, innovation properties. That's the REIT that I'd probably be one of the most interested in. But I think it's interesting. I think it is interesting. Might buy innovation properties. Yeah. Investing with coal is 100% red pill. That is true. That is true. Felix King. Sorry, not Flex King. Although you can call yourself Flex King. It is what it is. All right. So Felix King, I did, and I talked about all the stocks that I bought. If you look in the description, reminder for anyone joining in that's new, look in the description. Those are all the topics I talked about today. I'm not going to keep doing the live for too much longer because I want to keep it relatively short so it's viewable. That's another thing I want to make of the live streams. I want to make them more viewable and not 3 hours of, bleh. Also for me, I need to, allocate my time. But yes, I did. So I saved you some time going back. I did. Wait, did you buy So what do you think about Olaplex? Well, Olaplex is a company that we've been looking at in the Discord just here and there, kind of interest because of the product quality, and basically the opportunity ahead of it, the demographic it targets, as I was just going over, is can be very valuable. And, it's I think when they IPO'd at a very expensive price. You can see they IPO'd right about here. And, it's because everyone was very excited. I think management team did a really good job at IPOing when they did, because it was at a time when people were still very excited about everything. You can see in 2021, it was right before the liquidity crunch. And, they got to raise the capital that they needed. So, yeah. Investing with Scholes walking, talking black pill content. F2 Tendies. Oh, you're talking about Tendies when? Oh, Tyson Foods. I think that's referring to that. Women being the driving force of our economy sounds very not red pill. Yeah, I don't think that. I think it's the opposite of red pill. But no, it's kind of, so the thing is also, like, if you market to my wife something, let me be honest. If you market to my wife something, do you not think that indirectly markets towards me? Like, so let's play a scenario here. So my wife is doing something, right? And then there's a product that is marketed towards her, right? And then she really falls, she likes the advertising, and she's like, oh, I resonate with that product and I desire that product. There might be a comment here and there about, she comes to me and says, hey, hubby. She never calls me hubby, but let's say for the argument's sake, she calls me hubby, and she says, hey, I really like this product I saw. She might show me a picture. She might show me a link to the product and say, she likes the product. Next thing you know, maybe a week, a month passes. I don't know. But, next time I say, I'm going to buy my wife something. There you go. All of a sudden, I'm buying something. And they never marketed towards me. So try to give you some ideas there. It's not like they don't necessarily need to market towards you guys. All right. But that's just it. Like, for example, here's another example. But this is all anecdotal. I know. We would have to do some research on this. But, like, if we're both going shopping together and my wife has let's say, like, I don't care where we shop. That's the kind of the difference. So I could care less. We go to this place or that place as long as we get the shopping done. Well, where do you think my wife's going to say she wants to go? Come on, I'll give you guys a guess. It's red. It has circles. The mascot is a dog. Target, right? I end up at Target, but I don't care about Target. I could care less walking through Target. I don't have fun at Target, but I end up at Target, all right? And I guess, okay, I buy stuff at Target. They don't have to market towards me. Yeah, Zastar's right, man. That's how it is. That's just how it is. Hubby name. Sam. That is funny though. Dodge attendees question. Okay, so Tyson Foods. Don't worry, Fuhad. I won't dodge the question because you've been asking it a lot. Tyson Foods. I don't own Tyson Foods. I asked my wife. She didn't give me an answer on this, but I don't know if she's buying Tyson Foods. I don't think she's buying anything much of anything. She's been really busy, so she's kind of just focused on work right now. But Tyson Foods has basically cratered down about 27%, and if we go from the highs, down about 29%. So they're still far off the lows, but they're basically back down to the 60s price range. So again, question mark on the low PE. So the theme of this stream, we see a low PE. What do? We don't go, oh, buy. No. We ask further. We go, why? Why is the PE 6? What's going on? What's going on in the chicken market? And I think, Fuhad, you were sharing a bunch of research on the chicken market. So that's where I think is a good place to start. What's going on in the chicken market? And will Tyson Foods come out on top? Absolutely, I believe that. Why? Because in times of turmoil, in times of strife, the ones that are the best capitalized can probably, more than likely, come up to the plate and demolish the competition while the competition is worried about surviving. The one that's well capitalized, if they are, is not worrying about that, and they can focus on expansion for the next cycle, for the next time, right? So that's a benefit. Have you ever eaten Tyson Foods? I have eaten Tyson Foods. Why? You're talking about the chickens that they have at the grocery store? Okay, so demolish your digestive system. Well, there's the fried ones, yeah, the one that you prepare in the air fryer. But then there's the regular chicken. So, oh, my wife's apparently watching. She just texted me. I bought some Tyson nuggets for the hurricane. Which, by the way, there's a hurricane coming. So, it's a category 2. It's whatever. Any thoughts on venture capital companies? Been looking at HTGC. Great dividend, but not sure. No, yeah. Not for me, Fishman. Well, your name caught me off guard. Fish Fan Man. Okay, yeah, that's not for me. And the dividend yield being so high, well, we got to ask ourselves, how do they do that? Well, the answer is it's because of the nature of what they are. But let's pull up their stock, HTGC. I haven't heard of this one, to be honest. Hercules Capital. Okay, so yeah, let's see what they're investing in. What are you doing? All right, SaaS finance, sustainable renewable, life sciences, technology. All right, I'm getting an idea. Let's see here. IPOs, merger and acquisition, exits. Oh, I wanted to wait. Let's see first. How have they done? Yeah. Past performance isn't indicative of future performance, but my first question before I go any further, why the underperformance? I like to always ask that. Every time some of you guys bring up something, well, maybe they've always had this yield, and so you've pretty much only been making money from the yield. And then comes the question, how is this structured? Is this a C Corp? Maybe this is another question for you guys out there. Is this a C Corp or a partnership? And if so, that actually changes where I would allocate it to. But I think almost all the gains, not almost all the gains, all the gains had to have been from the dividend. And how has that been over time? Has that been kind of steady, crazy fluctuating here and there? Those are other questions. So the underperformance thus far is basically because all the performance has been eked out through the dividend. So yeah, that's a question. But is it a partnership? It is a C Corp. Bob Smith, you bought Intel today? You bought Intel, Bob? Bob, well, maybe, yeah. I don't know. I actually got to look at Intel again, to be honest. Again, we've been dogging on Intel, but I don't know. At some point, you would think. Maybe not. I don't know. But if there is a turnaround coming in the future, if Pat Gelsinger can truly turn this thing around, at some point, right? Some stuff is priced in. But anyways, I might make food. Not gonna lie, go make food. Go make food, Fuhat. I'll be here. This video at the end of the day will always be here for you. It will always be, as long as the Google server survive. It will be here. Sub 20 for Intel would be interesting. Sub 20 for Intel, that would be under $100 billion market cap. Wow, geez, man. That brings about some questions there. Let's see here. Questions about marriage. Thoughts on Goog right now. Goog, my favorite. Oh, okay. Yeah. All right. So I'm going to end the live stream soon, by the way, guys. So I'll answer some final minute questions. I had a good time. I think it's also a good time to keep it watchable. Remember, the goal, I want to do watchable live streams, more organized, and then finish off with Q&A. So I'll do Google, MasterCard, and Visa. Good? All right, so Google. So Goog. Let's go with the voting shares. I don't like the non-voting shares. That's the non-voting share class. All right. So anyways, yeah, it's under $100. I'm still not really in the I don't want to build Google out too much more. Like I'll nibble here and there, but that's quite about it. I'm focusing on other positions within ad tech space. And I want to kind of mitigate my exposure to too much ad tech. While Alphabet does have a cloud business, does have all this other stuff, it is a lot of ad tech. And for now, I mean, I'll be honest. I would be lying if I was not saying I didn't think about it. I am thinking about it, but I'm not there yet. I'm not there yet to where I'm building out more Google in the portfolio. It is interesting though. I'm happy with what I have right now. So, thanks for the live. Oh yeah, no problem, Thomas. No problem, Thomas. No. And if you knew context, there really isn't a need. There really isn't a need. But I technically, like, it's not my place to share the context of it. But yeah, I think for prenups in some marital situations, it's appropriate, but not all of them. I'll say that. Okay, so how do you feel about Google holding that 16 forward PE? Well, I mean, it's great. What's my max allocation in terms of? I think I said that at maximum it would ever be is probably around the 15%ish mark. But the thing is, they have to answer a couple questions for me. While I have spoken to a couple engineers or former engineers, we actually have a decent amount. Not all of them have spoken to me about this, but some that worked at Meta for a decent amount of time were able to share some of their thoughts with me regarding the ad tech. And by the way, those people are remaining unnamed, but this is a former. So there was some reassurance that Meta is making necessary investments into kind of moving away from cookies, but I want to kind of wait and see. But I'll tell you this, right now, Meta is definitely not priced for some sort of change. People think, it's the R&D expense into the metaverse. Oh, it's this and that. No, I think for the most part, we've all kind of agreed that it's mainly this question mark around how are they going to adapt to the changes that Apple has done and Alphabet has done. And if they can do so, then I don't think that's priced in. I really don't. I think it's just a big question mark. So that's kind of the question mark I'll leave with Meta. And if it turns out that Meta has fixed that problem, and we might find out in the next couple quarters, don't be surprised that it basically roars after that. Because that would be a big deal. And Meta has been doing some interesting things that I've agreed with. I've wanted them to do this for quite some time, moving in towards that space where PayPal is, because I think that's a natural progression. Look at WeChat in China, and then just think about the opportunity that Meta has before it with WhatsApp. Something that people don't really talk about too much. And Kingdom, if you're still in here, you also address some of these topics as well. But in India, the usage of WhatsApp, it's universal. So many people use WhatsApp. So there's a potential that if WhatsApp becomes this quasi-banking entity where people can change and do commerce in, that is a huge potential, as well as Instagram. But you hear the words that I'm saying, potential, right? It's not, they have to execute. There's a difference between, saying we're going to do this and execution. But if they execute on that, I don't think any of that is really priced in. And, then that brings about question marks for other companies like PayPal. Like, I don't think in the United States, and I think that's kind of makes it difficult for Americans to sometimes invest because maybe we only have the American perspective on what is a good product or what is a good platform, so to speak. For example, WhatsApp you got to understand WhatsApp is a very popular product globally. It's just not very popular in the United States. So a lot of Americans don't appreciate what WhatsApp is. I kid you not, I believe it was on Everything Money. They didn't even know that WhatsApp was widely used in other parts of the world like Europe. They didn't know that. Or I think in Latin America. I'm pretty sure Seth made a comment, if I remember correctly. RIP. But sorry. I believe it was something along the line. I don't remember, actually. I don't want to misquote it, but it was some questioning about WhatsApp that it wasn't what it is, but it is. And yeah, so I don't think any of that's priced in, but I think the main concern, and we're going to see that over the next couple quarters, which will determine the allocation, is have they figured something out. If not, if it turns out that they really haven't figured anything out, then that's where I start to de-risk, take some profits off the table. Not profits, sorry. Take some money out. And then just move on. Accept the L in that case because the thesis has changed. So that's basically what I'm looking for. Okay, and then Visa and MasterCard. These are the two. So Visa and MasterCard, again, they're payment networks, so to speak. And so money moves through them. They've really benefited from basically no competition for a long time. Visa dominates the United States. MasterCard dominates Europe relative to Visa, but they're both very strong in the United States. So I think I do have a dedicated video to these guys and American Express, but just so you're clear, they don't carry any of the risk associated with the payments. They're not a bank. They are not a lender. They don't do any of that. And so, they're basically just the toll road in which money passes. They collect their little toll. And basically, they have one of the best profit margins you'll ever see on a company. If you don't believe me, go check it out. I think Visa's like at 50%. MasterCard's at another like almost 50%. The gross margins are disgusting. I think MasterCard, depending on the website you go, will show 100%. But it's disgusting. They're incredible companies. Now, being where they are now doesn't mean that they're immune from innovation. That's such a cringe word now because of who uses it. But don't think that there's not going to be potentially innovation in this space that could topple them at one point. But so far, there's nothing there. And that's why the market continues to hold a premium to Visa and MasterCard. But what's going on now is the concerns that, of course, payment volumes do decline because of global recession. And if payment volumes do decline, then exactly what you think would happen to Visa and MasterCard. They're going to collect less fees on that toll road because there's less cars, there's less money going through the toll system. But you have other companies, other players like American Express. You have the banks themselves. So all the banks basically. But American Express is a bank, but a bank that focuses on credit cards and charge cards, etc., corporate cards. They're not really too much on the whole, let's extend out mortgages and loans and stuff like that. But I do believe American Express now has products for checking accounts, savings accounts, et cetera, stuff like that. So they're expanding, and the barrier to entry for a online bank is non-existent at this point for these larger players to kind of go move horizontally into that space. So I think it's a good move for American Express. American Express has one of the best brands. That's why I agree with Buffett on that one in terms of branding, but American Express at least has that branding. I don't necessarily fall for the whole their cards are the best, but their cards have good protection on your purchasing. But Rumblin, I don't know what Rumblin is. So Visa and MC lost China, and now they lost Russia too. Yeah, but I don't really care too much about China as much, and same with Russia. Me personally, but MasterCard and MasterCard Visa with China, that should have been expected, in my opinion. China over time is going to become more and more hostile economically to the United States. There's videos, for example, you go back to the Tesla video. I scandalously said that Tesla going so deep into China is kind of a mistake for me. It's a short-term move, but I don't think that it's going to benefit them too much. And I think now there's actually been a distancing as of late between Tesla and China. I think they've stopped expansion, so they're kind of realizing that. So yeah, that video did age well now. But yeah, it's not a. you know my thoughts on China. It's not a country you want to really be doing business with, in my opinion. They don't follow the same rules. And Americans and Europeans and Westerners apply, and this is a big fancy word. It's a made-up word, but a Western normative mindset to China. It's like, no, stop. It's a totally different system. But yeah. Who the heck is Rum? I don't know who Rum is. Rumble. Talking about Rumble stock? When you cover Rumblem? BRICS countries will do their own thing. Figs and Olaplex are great early on brands. Not going anywhere. Yeah. Well, I agree. Like, I don't know much about Figs. Gotta be honest. Aren't they moving into monetization? WhatsApp? Oh, yeah. So I saw Neon too late, but I'll be closing off the stream. So this is, oh, I see Echoes is in here. Hey, how you doing, Echoes? Yeah, Sparky's here. Sparky there. And then Sparky said something else. Anyways. ET screaming by, sorry. Energy transfer. So energy transfer, let me see. I think they're the one. Yeah, okay. I believe energy transfer is the one that's already transitioned over to a C Corp. Yeah, this is the one that's already, I think, transitioned to a C Corp. So the thing is, I like Enterprise Products. I think that's the name. I'm better than this company. But right now, and I think that's actually a reason why that they could roar or outperform if they change over to a C Corp, because then they can be included in a lot of indexes. But if you actually look at since the transfer, Energy Transfer has, pun intended, I guess now, has actually outperformed Enterprise Products because Enterprise Products is a partnership. So it makes it that. What is that? Figs had a pretty interesting short report. They had SCOC 60. Oh, wow. Oh, I got to be careful when I'm talking about that. So ET is screened by $10. Rum stock, Rumbo, Visa, MasterCard. Yeah, okay. So I talked about that. Rum for Steve. Okay, I'll type in Rum. And this is where I'll finish off. Last thing. What is this? CF Acquisition Corp. Rum. What the heck is this? Oh, Rumble. Like it's going to become Rumble. Yeah, I don't really care for it. I don't really care for it. Y'all and your U.S. handbook references. Yeah, I know. Have you looked into geothermal stocks, Bob Smith? No, honestly, I have not. I can try to start looking into some. But no, I haven't really looked into it. It's not my cup of tea, but I'll make a note of it to look into it. Okay, so thermal. All right, I made a note, and I shall do that on time. All right, I will see you guys on the next one. Thank you guys so much for joining me on this live stream, and we'll see. Let me know in the comments after the fact how you guys liked it. Do you guys like the more structured, moving into Q&A and all that? And yeah, I'll see you guys on the next one. Bye.